Hey, Michael Petrovich, Petrovich Team Home Loan. So you're looking for a home loan in Nebraska, but you're either not sure what you qualify for or concerned that you don't qualify. It's possible that the FHA program is right for you if you think you have less than perfect credit, if you think you might have high debt ratios, if you're concerned about cash to close, if you think you don't have a large enough down payment. That's what FHA was designed for. It was designed for people that might have less than perfect credit and maybe don't have the income or assets needed for the a typical conventional loan. Um, it is not a first-time homebuyer program, so you do not have to be a first-time homebuyer to use it. It's just used by a lot of first-time homebuyers because of those qualities, because it allows higher debt ratios, because it allows less than perfect credit. And the FHA program has great rates for people with excellent credit and less than perfect credit. Actually, the rates are almost always better than conventional. There are reasons why you would go conventional instead of FHA, even with a higher rate, and I'll get into that later. But you're looking to purchase a home with less than perfect credit. Good news is FHA will go down to a 580 credit score. Now, we recommend that you get to at least a 620. And actually, if people come in and they have below a 620, we usually look for reasons and ways to get them above that 620 because the rate and the fees are affected drastically once you get below 620, and especially once you get below 600. The loan itself becomes a lot more difficult to approve. So even though you have those scores, there might be something on your credit that is causing that will disqualify you for FHA. So we want to look at ways, if possible, to get your scores above 620. And a lot of times there are some simple things we can do to get those scores up, but they will go down to 580 on an FHA loan if you have lower credit scores. This is an option to get into a house. So credit history, another reason why it's very popular for first-time homebuyers is it does not need quite the credit history that the conventional requires. They'll allow what's called a thin credit history, which is just a limited amount of activity or just a short time frame on your credit. They'll even allow what's called true no scores. What that means is that you have actually no credit history whatsoever. So you've never taken out a debt, either just you've never used debt or you're just new to adulthood, I guess, and haven't really established a credit history. They'll use non-traditional credit. What that is things that you pay on monthly that are not appearing on your credit report. Rent is the big one, utilities, cell phone, insurance, things like that. Biggest issue with this becomes that these items have to be in your name. So a lot of times people will come in with no credit scores and all those debts are maybe paid by them, but in a parent's name typically, or in someone that's not gonna be the loan, it's in somebody else's name. So that's where the big issue you run into with that, with the non-traditional credit. But it is an option if you are making monthly payments on items and paying on time for 12 months. We can use those if you have no credit score. If you've had a Chapter 13 or Chapter 7 bankruptcy, FHA is an excellent program because the wait time is a lot less on an FHA loan. For a Chapter 7, it's 2 years after the discharge. For Chapter 13, you could actually be in the Chapter 13 making payments on it. As long as you have a 12-month payment history of on-time payments on your Chapter 13, you can get an FHA loan as long as you meet all the other guidelines for FHA. They're going to be a little more strict when it comes to being in a Chapter 13. They're going to scrutinize everything a little bit more, but it is an option if you're currently in a Chapter 13 for 12 months and have those payments. We have to verify the 12 months of payments. You have to verify the court will allow you to take out new debt, and then you have the option to go with the FHA loan program. Foreclosure, another thing that has a shorter time frame. So FHA requires 3 years on a foreclosure. This is 3 years from the date the bank took ownership. So it might not be the date that you think the foreclosure ended, but the bank could have taken ownership months after you finalized your part of the foreclosure. So that's something we have to look at. What was the date that the bank took ownership of that previous property, and has it been 3 years? And then if that is the case, you can go FHA, whereas conventional is a 7-year wait period for foreclosure. And it's 4 years on the bankruptcy, going back to that 4-year wait period for conventional on the bankruptcy. Judgments. So most loan programs require judgments to be paid off, but FHA requires either them to be paid off or they'll give you the option to set up a payment plan. So you can set up judgments on a payment plan. You'll need 3 months of payments on a judgment. So if you come in and want to buy, immediately, and you have judgments, we're just gonna have to set those up on a payment plan and wait those 3 months for those to get that 3 months under. You can't just make all 3 payments at once. You have to pay them 3 months consecutively on time, and then we just add that payment to your debts. And as long as you qualify, we don't have to worry about paying that judgment off. Okay, debt to income ratio. So this is another area where FHA is advantageous for people that are just starting out, first-time homebuyers, but not necessarily first-time homebuyers. FHA will go up to almost 57% debt ratio. So we take the house payment, everything on your credit, and we calculate that based on your gross monthly income. And as long as that's under 57%, you could qualify for FHA. Doesn't necessarily mean you're not guaranteed to qualify. They're going to look at other factors, credit score, assets, credit history, but they will go up to that on the debt ratios. So if you're, for whatever reason, pushing the debt ratios, and I address this in the article, that we don't want to sell you too much house, but there are reasons why you would have a high debt ratio and still be able to afford the house. Maybe there's income we can't use, that you have. Maybe you have overtime and bonus that we can't use for qualifying purposes, but you are receiving. Maybe there's another person in the household that's not on the loan but is bringing in income that can help you make those payments. This will allow you a little bit more flexibility on the purchase price by going up that little bit higher on the debt ratios than conventional. As far as assets, FHA is pretty similar to conventional and VA loans. They require liquid assets. If you're going to take a loan out for the assets, it has to be against secured property, car, another house. You can get gift funds on an FHA. The gift funds must come from a family member. So it cannot be a loan. They have to sign a letter saying it's not a loan and how they're related to you, but you can get the money from the 3.5% down required on FHA from a family member. So if you have absolutely no money available, we do an FHA loan. Your family member gifts you the money that needed. Maybe you have a seller give you some money for the closing cost. However you want to work that, but we can work it out so that you get into a house with no money out of your pocket if you can get gift funds from a relative. And that's an immediate relative. Aunts, uncles, brothers, sisters, parents, cousins they don't like. That's too far out. But immediate family you can get a gift from. Now, what's one thing to consider here is that you cannot get assets. This is why they scrutinize assets on every loan program. You cannot get assets from unapproved sources. That would be unsecured loans. So credit cards, an unsecured installment loan, you cannot use those funds for your down payment. That's why they're gonna paper trail any large deposit in your account in the last 60 days to make sure it didn't come from an unapproved source. Cash, and this is a problem on every loan program. They don't like cash because it can't be traced. We don't know where it came from. So if you have cash sitting at home, we're going to have to kind of make a long-term plan, at least a few months out, to get that in your account and let it age a bit so that it's not showing on your last 2 months bank statements. But that's something we have to work out. If you have cash at home, we need to discuss options. You can't just put it in the bank right away, right before close and use it. But just contact us. We'll go through it with you. If you have cash, some people come in, they have $10,000, $20,000 in cash at home. We just need to get that in the bank so that we can verify where it came from. And with cash, we might just have to wait for it to get past the period when they go back and verify on FHA. FHA. One great thing about it, especially in Nebraska, is that FHA is limited on the max loan amount. So as of 2020, it's right around $330,000 is the max loan amount you can take out, which in a lot of areas of the country, that's not enough even for a first-time home buyer home, for a starter home. But in Nebraska, average home prices are below 200. Almost every home fits within FHA. So very popular here because for anybody with less than perfect credit, higher debt ratios, limited assets, you're really not that restricted on what houses you can afford in Nebraska because of that low average price point here in the state. So if you have any questions, contact us, send us an email, send us a text, give me a call, book an appointment in my calendar down below, and we'll see what we can do. All right, thanks.